Hey everybody, hope everyone's doing well and had a good day. This is going to be a brief recap of the Emini for Monday, February 24th, 2025. There's a relatively small gap up on the open, and if we just scroll back and look at the context, even without looking at the Globex, just look at the regular trading hours, the day session only, you can see this tight bear channel, and we converted into a tight trading range, but all of the bars were below the moving average. The gap up today, you can think of it as a breakout, but breakout of what? And sure, the gap up did break out above the past, maybe 20 bars here, but what about the top of the range? We broke out of the top of this smaller, tight trading range, but what about this lower high? Well, we opened just below it, we tried to break out above it, and we failed to close above this breakout point, the 57 high from last Friday. By the way, if I say yesterday and today's Monday, when I say yesterday, I'm referring to the prior trading day, so this would have been Friday. I'll just draw Friday's low as well. So what happened on the open today? We gapped up, and the bulls tried to get follow through. They got basically the, depending on how you look at it, the bare minimum for follow through, because they prevented a bear close on bar one. But bar one closed below its midpoint. So really, in reality, the bears owned the bar. We rallied, but we sold off into the close. The bar closed well below its midpoint. So failed breakout of this lower high from Friday, and then a strong breakout bar on bar two with follow through on three. Now we have a gap between the bar one low and the bar three high. So there's a micro gap here. Trapped traders. More follow through on four. Bars 2 through 4 is a spike in channel on a smaller time frame. Spike pullback channel for 2 or 3 legs down. Then we got a sell-off on bar 5. And that's a little bit surprising. After 3 or 4 bar micro channel, spike in channel on a smaller time frame, you expect some kind of correction, but instead we sold off even further, bars 5 and 6. And then look at bar 7. Bar 7 is the biggest bear bar so far today. And whenever you get the biggest bar late in a move, that could be a sign of exhaustion. So bar 7 is actually a warning that this is getting really climactic. This is unsustainable selling. So really strong leg down for the bears, but unlikely to remain this way all day long. Small pullback trend bear days, they don't look like this. They're more, it's more of a tight channel. The bars are smaller, uniform in size. This is getting climactic. So reversal on bars 8 and 9. So reversal and follow through for the bulls. That's good for the bulls. Strong enough that this trapped traders below. I actually want to talk about this. Bars 8 and 9. So like I said, reversal and follow through, but probably a minor reversal. After this much selling, the odds are the first trend line break will fail. And by that I mean the market will probably not convert into a strong bull trend, and we probably will not have a V bottom. In other words, we'll probably retest the lows. And the first price I look for to get retested is the low close. So in this case, bar 7. So reversal and follow through. Strong enough for a second leg, probably buyers below. But then a strong reversal bar on 10. And what this is setting up on a higher time frame chart is basically a low 1 short. And bar 10 actually is a low 1 signal bar. We didn't trigger it until bar 12. So there's a low 1 short here. And what happens after low 1s? And it always depends on the context and the depth of the pullback. But let's think about this. We sell off from bar 2. Let me just turn off the snap mode. Depending on where you know which points you use for the bear leg, However you look at it, this is going to be around a 50% pullback. So fairly deep pullback. You don't get 50% pullbacks in strong trends, so this is either a bear channel or converting into a trading range. Because it pulled back this far, and like I said, bars 8 and 9, the reversal and follow through were strong enough for a second leg. That means there's probably buyers below. So bar 12, is this trend resumption? Well, the bears are hoping it's trend resumption. Bar 12 is a decent bar, but then bad follow through 13. And you have to wonder how many traders sold the close of 7 and got trapped on the reversal. And how disappointed are they in this reversal? Are they going to buy back shorts at bar 7? Because if the bears are going to buy back shorts at the close of bar 7, and the bulls are always buying, then we're going to find support here, and the market's going to bounce on that support. So 14 testing near that support level. Looks like we're finding buying, but now this is actually a 5-bar bear micro channel. We might need a second reversal before we reverse back up. We triggered the buy above 14, trying to continue down. Now we have a second entry buy, 16. I think it's reasonable for traders to exit shorts above 16. Bulls can buy, taking a chance. This one failed in a big way fairly quickly, outside down 17, but 17 actually has a similar problem that bar 7 had. Look at the bear bars 13, 15, and 17. Bodies getting bigger, but now we have a late leg and a double bottom. So we're testing support. It's a dueling lines pattern. So it's a wedge and a double bottom. So there might be support down here. 17 being an outside bar, it's an expanding triangle on a smaller time frame. So if that's the case, then the low of the bar might be the bottom of a trading range. So there might be more buyers below bar 17 because of this rally, this fairly weak continuation attempt by the bears, and this rally might need a second leg, and this might need to be a more complex pullback before the bear leg gets, before this bear breakout gets a second leg down. I do think this bear breakout will get a second leg down, and I don't think the sell-off down to 17 is that second leg. 18, another bar, reasonable for bears to exit above it and for bulls to buy. Now, I don't want this to become a bar by bar, but I wanted to make the point that this is a low one short on a smaller time frame. So 18's it's one of the bars that might flip the always in direction. The fact that it's bar 18, the bar 18 reversal that Al talks about, by the close of bar 18, there's maybe an 80% chance you've seen either the high or the low of the day. And at this point, you don't know, what's the probability 8 remains the low of the day or 1 remains the high of the day. In general, bar 1 is only the high or low of the day 20% of the time. But after this much selling, it looks like this might remain the high unless the bulls do something pretty strong on the reversal attempt. And as far as this remaining the low, again, it depends on what the bulls can do here. But in this context, it makes sense that we might rally to at least the high of bar 10 because of the market cycle. Spike, pullback, beginning to channel, but weak channel. And then we may have to test the highs. The bulls may have to get their second leg, like I said before, the bears get their second leg. So reasonable to buy above 18 to buy back shorts or to go long. And the bulls got a rally. We got a 3-bar micro channel, bar 20. It's a bad stop order short signal bar. And the context actually makes sense for the bulls, like I said. And this is because of the market cycle. Now we have a possible high or low double bottom. And we have a test target, the bar 10 high. What's the probability? And who knows, maybe by the close, what's the probability the market rallies back up here before we test back down here? It depends on, like I said back here, how disappointed are the bears that sold the close of 7? It looks like they're buying back shorts on the retest. If that's the case, bears might not want to sell again until we get to the top of a trading range or some other resistance. That might be the bar 10 high. And that's what can cause a vacuum move. Now in this case, look at the bars 21 through 23, and really the entire rally. Even though there's a pullback, 21 went below 20. This is a really strong rally because the bars are not climactic. They're really uniform in size. We have a couple of open gaps. Most of the bars closing on their highs. And once again, the context is good. So the physical appearance of the breakout is good, but also the context is good. And that's good for the bulls. And that means, yeah, that might be, bar 10 might be the top of a trading range. However, remember what I said over here. Traders maybe were expecting a pullback after bar 4, and then we got the sell-off on bar 5 and the follow-through. So this area might be resistance. Maybe you expected this to be support somewhere in this area. You get the sell-off, the bear breakout, and what you expected to be support becomes resistance. And like I said, strong enough rally here. Now this entire breakout from bar 18 to 23 is probably going to get a second leg. In other words, this does not look like a classic second leg trap to me, where this is leg 1, deep pullback, second leg trap, top of a trading range. And I get the argument. There is an argument for it. Much bigger bear breakout, complex pullback. This is a low 2 on a smaller time frame, but look at the approach. And that's the biggest problem. Compare this rally to this sell-off. Big bear bar, bad follow-through. Dojis, overlap. Another big bar, but an outside bar, and then no follow-through. And compare that to the rally. Like I said, lots of characteristics going for it. Second leg traps are more climactic, and they're stronger looking than the first leg, but by that I mean they're usually just one or two big, strong looking bull bars that race up to resistance and then reverse quickly. 24 broke out of this resistance, and it looks like we have to go higher. 24 traps traders, but 24 has the same problem that bar 7 had, where finally, after 6 or 7 bars, we're getting a climactic bar, and 24 might attract profit taking from the bulls who bought lower. That doesn't mean we're going to get a complete reversal, but the expectation here might be a couple of legs sideways to down before the bulls look to buy again. So let me speed up. This rally produced a spike in channel bull trend. It's still within a trading range. We still have this big sell-off on the open. So the spike in channel is great. But after 3 or 4 legs, and you're testing maybe near the open of the day, let me back up. I'll change that to the low of bar 1 because earlier I mentioned there's a gap. The low of bar 1, the high of bar 3, micro gap. So the low of bar 1, traders who bought below bar 1, betting that the gap up and follow through would get a second leg. They got trapped on the bear breakout. It was a reasonable thing to do, buying below bar 1. Like I said earlier, bar 1 usually is not the high of the day, which means you can buy below it and probably get out above it if we haven't been above it yet. And it's a bad stop order sell signal bar. It's a doji with the bull close, so not ideal. But traders were trapped. You have the bears who didn't sell, trapped out of a winning trade. That creates resistance back up here. And markets have pretty good memory, so even though it happened however many bars ago, 30 or 40 bars ago, you can see the reaction at that price. It's another dueling lines pattern. It's a wedge and a double top. So after channeling for maybe 15 bars and 3 or 4 legs, the expectation you're probably going to get 10 bars and 2 legs sideways to down. Because of the structure of the day and the overall environment, we had a huge bear breakout yesterday, follow through selling on the open today, a very deep pullback compared to or relative to today's range, but not so deep when you compare it to the entire sell-off. And like I said, this breakout down to bar 8 is probably going to get a second leg, even if we pull back really deep. And this is the interesting thing about how markets are fractal. I mentioned I'm studying 3-bar micro channels, and sometimes a micro channel pulls back 80%, 90%, sometimes even over 100%, and then they still get a second leg. So even though we're at a very deep pullback here, we're still not above the start of the bear breakout, the bar 1 high. This is still a lower high, and bears are going to hope or try to produce a second leg down. The bulls now have had a spike in channel. We're probably going to test back down to Friday's high. And the reason I say Friday's high, and I have that drawn still, is because of the market cycle. Spike, pullback, channel. So we started the channel, and the start of the channel was the low of bar 26, and that often becomes the bottom of a trading range. It's a test target. 3-bar micro channel down to 42, but completely above the moving average, but still probably will get a second leg down. And I'll talk about this one. This was a signal for me. I sold a close of 42, and I was willing to scale in. And when we got 46, it was kind of crazy. I had a family emergency right around this time when I was in this trade, and I had to leave. I left somewhere around here. I stayed short, had to stop above 40, and I returned just before the close of 46 in time to sell the close of 46 to scale in so that my average price was the midpoint, and that was tested on the very next bar. So I exited that trade with a very small loss. It didn't quite get to my average price, and because I'm trading the SPY, I'll say it missed my average entry price by 2 cents. And when it started to rally into the close, I decided to just close the position with a small loss. So it was basically a break-even trade there. That was the only trade I had today. And then the bears still creating lower highs. We're in breakout mode. This might be a triangle. And after the spike in channel, late leg for the bulls, still a lower high, still might get a second leg down. There is the risk of a downside breakout here, a bear breakout. 52, breakout attempt. And breakouts of triangles often pull back and test the midpoint, the apex of the triangle. In this case, we didn't get it. 53, tried to get back up there and failed. And 54, we continued. So it might be a breakout, pullback, and then continuation. Still a micro channel for the bears down to 54. So good for the bears. This will probably get a second leg down. Deeper pullback, 55. There's that test of the apex of the triangle. You can see we came really close to this price and then sold off. Why does that happen? What happened there? What's the logic? The market's in breakout mode. There's arguments for both sides here. Even if you have maybe a slightly bearish bias here because of the overall structure of the day, it's just about 50-50 here in a tight trading range and a contracting triangle. So you have bulls and bears taking trades. 52 traps traders. You also have traders on the sidelines. So bears did not sell. You have bears who did not sell, and here they missed the bear breakout down to 54. So traders who were flat missed the sell. They're hoping the market pulls back so that they can sell at a discount and then capture a second leg down. You have bulls who bought, hoping for the bull breakout, trapped on the bear breakout, but if they're using a wide stop, they scale in. They're looking for a pullback, a retest of the apex of the triangle, the area where they got trapped, so that they can exit the losing position at break even, and maybe even if they scaled in, exit the lower entry at a profit. Let's use the bar 51 low. It's a bull bar, not a great sell signal bar, but we got a breakout and an open gap. And that gap, the low of 51 and the high of 53, there's a gap. There's a space between these prices. And that's going to be a test target. And what should have been support becomes resistance because of the bear breakout. So 55, it's you have to ask yourself, is 55 a strong bull reversal, or is it simply a buy vacuum test of resistance? And by the reaction, you can see traders did not buy aggressively here. In fact, they basically sold a close of 55. They sold above 55. So this might be a breakout pullback. The bears may get a second leg down here. Another 3-bar micro channel. It's often, when there's a big, small, big breakout, and I haven't studied these in too much depth yet, but I do know that you're often going to get a pullback that tests, in this case, the low of the small bar, big, small, big. So rather than sell the close 58, maybe sell the low 57. I had an order set to sell the low 54 during 59, but the market did not fill my entry, sold off, and I canceled it because I didn't want to get filled on that trade after it rallied for the second time. And then I had to basically be done trading for the day there. So that was all I did today. And for the rest of the day, remember the blue line, this was Friday's low. It's also the start of this bull channel. That's a test target. So over here, and this is tricky. I remember we were talking about this today. The market did not make this one easy. 3-bar bear micro channel. Second leg down likely, but what's the leg count? It's at least leg 2, right? Maybe leg 1, pullback. Leg 2, it's some kind of late leg, and the market's in a trading range. So it's hard to go short here, but the reality is we're probably going at least a little bit lower. Now 61, also a really interesting couple of bars here. I like this setup. To me, I see bar 61 as a second leg trap, and I kind of talked about it back here. It's a small version of this, and I'll try to explain it on the 5-minute, and then we can look at maybe the 1-minute chart. Maybe that will demonstrate it better. The reason I see 61 as a second leg trap is because we just had a 4-bar bear micro channel, reversal attempt on 59, trend resumption attempt on 60, but this is a low 1, which typically pulls back. You get a complex pullback, a deeper pullback, you get a low 2, and then maybe trend resumption. So weak reversal attempt 59, trend resumption attempt 60, and then another reversal attempt 61. This one looks even stronger than 59, but now this is leg 2 for the bulls. We rallied from the low of 59 to the high of 60, pulled back, rallied for a second leg to the high of 61, and it looks like it's about a 50% pullback of the sell-off. So you can see, for that reason, to me, bar 61 looks like a better sell to close bar. And I believe, I haven't looked yet, I'll look right now, but to me, I think it's going to look like some sort of second leg trap on a smaller time frame. So let's look at bar 61 up to 2:35 Eastern time on the 1-minute chart. And so that's, pretty much bigger sell-off, couple of legs. Now it's leg 2. And what's the context? You might call it a bear channel. We're getting lower highs, lower lows, or you can call it a trading range, but you would not call this a bull trend. So leg 1, leg 2, and let's look at it on the 1-minute. What are we testing? Well, there's a breakout. There was a trap on 2 bars after 57, the stop order. We rallied above this bar and then sold off, and that traps traders. It traps bears out, traps bulls in. You get a sell-off, complex pullback, couple of legs, and maybe 15 bars. We're getting near that resistance, but second leg trap. I'm just curious about the 2 minute. Didn't demonstrate it exactly the way I wanted it to. It's kind of, this is all right. It's the same idea, bigger sell off, 1, pullback, 2, second leg, but still a lower high. So if you're buying here, this is something that, write this down and really think about it. This is something that Brad told me. If a trader can really understand this, they'll be in a much better position. Let's think about the logic. If you're buying here, you need momentum as a bull. You have a tight bear channel, probably a minor reversal. You're hoping we get a low probability event. You're hoping the market just rallies and traps traders, which means you're hoping or you're betting on momentum if you're a bull. And this is a pretty decent bull bar, but look at the follow through. And that's bad follow through. Even though it's a bull bar, closed above its midpoint, closed above the moving average, it's a trading range bar, and it pulled back. If this is a strong breakout, if it's going to be the momentum you need it to be, it should not have pulled back like this, and the bar should have closed on its high. So this is a warning that if you're long here, you might think twice about being long here because you need momentum, and this is not momentum. So because of that, bulls will buy, taking a chance. They see this bar, they're disappointed in the lack of momentum. They see the bad context, we're testing resistance, and the bears are probably going to get a second leg down. It's about a 50% pullback. So if you're a bull, long for any reason, you might just bail out of the trade here. And that's what happened on the next couple of bars, and then we had a give up bar. So the whole point, what do you write down? What am I getting at? If you're buying and you're at resistance in a trading range, whether that's the middle of the range or at the top of the range, the only way you can buy is if there's sustained momentum. You need a really strong breakout, and this is not that. This is a bull breakout, a pullback, and a second leg on a smaller time frame. It's a nested leg 2 and a 50% pullback. So it's okay to be long here as long as you know what you're doing, and you have to know that you're taking a low probability trade, and you need to know what invalidates your premise. And if your premise is we're going to, betting on the low probability reversal, you need to see a momentum. And when you don't see momentum here, you need to exit the trade. Maybe if you want to have a systematic exit below a bear bar. You just exit right there. And then you're glad you did. So we channeled back down to the bottom of this trading range. But look at the price action there. Lots of bear bars, buying pressure, not very good. Tight bear channel, broke out below it. Bulls try to make the breakout fail, but we're going more sideways. And sideways, it's not ideal for the bears, but it's better than up. And again, the buying pressure really isn't there. Where's the significant trendline break? The bears have a trend line that's still intact. And remember I said this bear breakout might still need a second leg, even if there's a very deep pullback. This might be an 85% pullback, but you can still get a delayed second leg. So that's what we ended up getting here. Give up bar right at the end of the day, and we went back and tested the lows. So look at the 5-minute chart today. It's really mostly a trading range. Big down, big up, big down. But on the daily chart, on the RTH, it looks like a pretty decent bear bar. But if we just look at this chart, what's the problem with follow-through bar? Even if you didn't know what the 5-minute chart looked like, the problem is that it's a much smaller bar than Friday. That's not to say this is going to fail in a big way. I think the context is pretty good for a couple of legs down. I think the bear breakout is strong enough that it will get a second leg down. But this, momentum is drying up. So as good as the bar looks on the daily chart, you have an advantage when you know what happened with the price action on the smaller time frames. Big down, big up, big down. Wasn't as bearish a day as it might have seemed if you just looked at the daily chart. So that's it for today's recap. Thanks everybody for watching, and I hope everybody has a good night.